Hey swing trading family, this is Super Swing Trader. I hope you are doing well. Today we're going to take a look at some charts and see where we can identify supply and demand zones and trade it for income. Before I do, if you're new to this channel, here I talk about swing trading using the rules of supply and demand and technical analysis to trade with the big banks, hedge fund managers, and professional traders, and not against them. If that's something you're interested in, please make sure to hit the subscribe button and turn on the bell notification so you can be notified whenever I release a new video. Also, drop a comment below. Let me know, have you guys placed any trades and have you made any money with swing trading using supply and demand yet? Comment below yes if you have and no if you haven't. I really appreciate your comments because it helps me tailor my content to best serve you. Apart from that, let's get right to evaluating the charts. Okay, let's take a look at Alibaba Group Holding, stock ticker BABA. This is one of the requested stocks that one of my viewers requested for me to analyze. So let's take a look at it. Let's get away from analyzing forex stocks for a little bit and take a look at US stocks. Okay, so this is I'm trading the very long time frames, the weekly, monthly, and 3 months charts on the US stocks, just because they are making such slow moves that I don't want to check it every day, because every day is just going to take forever to make a move. And let's take a look at the daily. Yeah, you can see that, you know, every day is just making these very low moving price action on most US stocks. Maybe some stocks that are in the news can make bigger moves, but it still takes a very long time just to move to our areas of supply and demand zones that we want to trade in. So that's the reason why, and plus there's thousands of stocks that you can potentially take a look at, and I'm just not interested in looking at these every single day because they don't make that much of a move. And even for forex pairs, I'm not really even interested in looking at the ones that don't really make any moves at all. I just set my alerts, and if it gets there, it gets there. If it doesn't, it doesn't. I'm just going to trade the ones that are moving faster, the non-exotic pairs. But it doesn't mean that I don't trade the exotic pairs. I just don't look at it every day. I have alerts set up, and when it happens, it happens. Okay, let's go back to the weekly. That's the reason why I'm not trading the daily, but you can apply my methodology to any time frame you want. But just know that the lower the time frame, the more you're going to be trading with high frequency traders, and that you're not really going to be trading with the big banks and the hedge fund managers, because they're placing longer term trades. They're taking days, weeks, even months to build their positions, and they're not going to be able to do that within a few seconds, few minutes in the market and let everybody know where their orders are. If you're familiar with day trading, they have the scanners that look at the bid and the ask and see where all the big buyers are and stuff. While the big banks and hedge fund managers and institutional traders, they want to conceal those big orders as much as possible. So they're just going to put in many hundred lot or 100 stocks purchase, 100 quantity purchase, to try to fool those day traders to mask their orders so that those day traders can't figure out where they're buying and selling. But if we look at the higher time frames, like the weekly, like these, like that, then it clearly shows us where they are buying and selling and where everyone's buying and selling, basically. Okay, so that's my whole deal with trading, swing trading, and not day trading. But also, besides that fact, I do not want to sit in front of a computer and trade for 3, 4, 5 hours or even 8 hours a day. I don't want to do that. Okay, so let's take a look at the 3 months chart. We see that there's a big rally, and then it formed this pause, a rally, base rally. So then it formed this pause, and we were looking to, this is where we would be looking to buy, because it had this huge basically year of rally, and then when it goes back down here, we want to buy. but unfortunately price did not retrace down there. It just came short of it, and then it rallied. And so on the monthly, we have price. We have this zone form, but it's just not the best looking zone. It's super wide, but we could probably take half of it probably. And there's really nowhere that I can see here that why price would trace besides right here, but even then it fell short of this zone right here. So there's really no, because the thing you have to understand about American stocks is that they are so bullish. Unless there's like a really strong crash that can crash to the zones that we want, but they are just so bullish, most likely they're not gonna retrace to our zones. So either we just, if it goes up and it didn't reach our zone, but we know that that's a zone and it just goes up, then you can just buy at that, and if it is a loss, it is a loss, but kind of have to chase it just because it's so bullish sometimes. But if that's the kind of trader that you're looking to force trades, then by all means try that. But for me, I have a concrete set of rules that I take, and I'm not gonna chase these trades just because of that reason. It could go up and then it can go straight down. I'm sticking to my rule set. Okay, so we know that this is a demand zone. Price is reacting to it now. Okay. On the weekly, we have a demand zone down here. Price did not retrace to it again, and then it rallied. But since this trend line over here, means someone can argue to go long right here, but again, not my kind of setup, just because I don't trade these. When my trend line is broken here, I did not want to trade these pauses. I want to trade down here, so I'm not looking to go long on this zone anyway, so that's why I don't want to draw it. Okay, so we know price is reacting to this monthly demand zone, fell short of our weekly demand zone and rallied. So we know that this is supply zone up here. Okay, well, this body is so wide, we can draw like that, or you can take just half of that. Okay, so it has room to reach the supply zone, so if it keeps forming really strong candles like this, and then dropped, then we will want to buy here. If price does that, that's good. Otherwise, if price breaks this zone and forms like this, then yeah, we want to buy right here. Okay, so that is the analysis on Alibaba Group Holdings, ticker symbol BABA. I hope this helps you in your trading journey, and I will see you on the next one. Thank you very much for watching this video. Please remember to give it a thumbs up if you enjoyed it. Leave a comment below. I'd love to hear from you. And if you're not already subscribed, please click the subscribe button and also click that little bell icon. Then that way you'll get notified of the next video that I publish. Thanks again for watching.